2026 marks one of the biggest shifts UK landlords have experienced in a generation. Not because one single piece of legislation has changed everything overnight, but because several pressures have converged at the same time. Regulation, cost, tenant expectations, and investor behaviour are all moving in the same direction. For many landlords, this has created uncertainty. Some are considering selling sooner than planned, and others are unsure whether holding still makes sense. And a lot of people are trying to make decisions without clear information, which is where mistakes tend to happen. The purpose of this breakdown is not to tell you what you should do, it's to give you the context you need to make a clearer decision based on how that market is actually behaving in 2026 and not on headlines or speculation. We're going to look at the Renters' Right Act, Ground 1A, what's happening to yields across different regions and how investor priorities have shifted and how to think about that in a structured way. The Renters' Right Act is often talked about in extremes. Some people frame it as the end of the private renter sector. Others dismiss it entirely and assume very little will change in practice. The reality sits somewhere in the middle. At a high level, the Act removes the concept of no-fault eviction and strengthens tenant security. That alone changes the balance of power in the landlord-tenant relationship. What matters most is not the headline change, but how it affects optionally. Landlords who relied on flexibility now have fewer levers to pull. Timelines are longer, processes are more defined, and that has a knock-on effect for risk, cash flow, and decision-making. Another important point is that the Act does not operate in isolation. It sits alongside tighter compliance standards, rising operating costs, and increased scrutiny from lenders and insurers. Each of these factors alone is manageable. Together, they require more deliberated planning. For landlords with a well-run portfolio, the Act does not automatically mean exit, but it does mean that doing nothing or hoping things will revert is no longer the right strategy. Ground 1A is often discussed as a replacement for Section 21, but it's important to understand that it is not a like-for-like substitute. Section 21 allowed landlords to regain possession without providing a reason. Ground 1A introduces a reason-based route designed to balance landlord needs with tenant security. In practice, this means that possession is still possible, but it's much slower, more conditional, and more exposed to challenge. It also means landlords need to be much clearer about why they may need that property back and whether that reason stands up to scrutiny. Where Ground 1A helps is in genuine cases where a landlord needs to sell or reoccupy. Where it does not help is as a general exit mechanism. Relying on it as a routine strategy introduces uncertainty into timelines, which is exactly what many landlords are trying to avoid. This is why we're seeing more landlords explore routes that do not depend on possession at all, particularly when selling. Selling with tenants in situ removes reliance on the legal process and replaces it with a commercial transaction between both informed parties. One of the biggest misconceptions in 2026 is that all rental markets are behaving in the same way. They are not. Some regions continue to perform strongly, with stable demand and resilient yields. Others are seeing margin compression, where rent increases no longer offset those rising costs. What's changed is how buyers assess value. Yield is no longer viewed in isolation. Investors are factoring in compliance status, tenant quality, rent history, and long-term manageability. Two properties with the same headline yield can attract very different levels of interest. This has a direct impact on sellers. Properties are well documented, compliant, and tenanted by long-standing occupants are often more attractive than vacant stock. The presence of a tenant is no longer a drawback in itself, or certainty is. Understanding where your property sits within this landscape is so essential before deciding whether to hold or to sell. Investor behaviour has become more selective. Buyers are no longer chasing volume, they are prioritizing stability. That means predictable income, clear documentation, and minimal operational risk. Tenanted properties with a proven rent history often tick these boxes better than vacant properties that require reletting. Compliance has become a central concern. Buyers expect clarity on safety certificates, licensing, and tenancy terms before they engage seriously. Deals that feel incomplete or rushed are often avoided altogether. This shift is important for landlords to understand because it directly influences their liquidity. Properties that align with investor priorities tend to transact more smoothly, even in a more regulated environment. Now, the question that many landlords are asking right now is whether to hold or to sell. There is no universal, simple answer to this, but there is certainly a better way to approach that decision. So holding still makes sense when cash flow is resilient, compliance is strong, and there are long-term plans that are clear. Selling becomes logical when certainty around regulation, cost, all that time horizon starts to outweigh the benefits of continued ownership. What rarely works is waiting for that perfect moment and clarity. Markets move ahead of certainty, not after it. And the landlords who tend to navigate change best are those who act from a position of information, not from emotion. Understanding your options early gives you flexibility. Leaving decisions too late often removes it. So 2026 is not about panic, it's about intention. The landscape, yes, has changed, and landlords who understand that change are best placed to respond to it well. If you're new to this channel, the next step is to follow the Start Here playlist in order. That will take you deeper into selling with tenants in situ, buying tenanted properties, and understanding how the process works in practice. The goal is clarity, not pressure. And once you have that, every other decision becomes easier.